mean by that?
Well, I think if you look at the entire crypto universe, you have a lot of different creatures. You have crypto commodities, you have crypto securities, you have crypto exchanges, you have cryptocurrencies. And then you have a set of applications and protocols that interlace with all of these instruments. And what you have is a bunch of people in the ecosystem that don't necessarily understand or have the information to make the best decisions. And you have a lot of people outside of the ecosystem that are afraid to enter the ecosystem because they don't have the clarity they need. So for example, what's a currency? Well, a stable coin is a currency. In theory, if I can move $1 million from me to you without incurring a tax bill, that looks like a currency, a stable euro, a stable yen, a stable dollar. There's a huge amount of demand for it. It's probably $1 trillion to $5 trillion of demand for it. Everybody wants it. However, you have 3 different types of stable coins off the top of your head. You could have stable coins that are backed one for one with dollars, and they look fairly secure. You could have if you saw $10 billion of that stable coin with $10 billion of currency equivalents backing it, or cash equivalents backing it, then that's something that you probably could trust and put a lot of weight on. There's another set of stable coins that are backed by something. Let's say maybe they're backed by equities or they're backed by debt, and maybe I build a stable coin with $10 billion of junk bonds backing it. Not quite as, and the $10 billion of junk bond, maybe I have $10 billion of real estate backing a stable coin. They're not liquid. They're not mark to market. It's still something tangible, less tangible. And then the third stable coin would be, I just issued $10 billion of stable coins with nothing backing. They're all quote unquote stable coins. But one of them, like UST, collapsed to zero because it literally didn't have anything backing it. Or maybe the backing was 5%. It might have been back 5 or 10%. I don't think they had $18 billion worth of cash equivalents. So they probably didn't have $18 billion of real estate or junk bonds backing when they got to 18 billion. They had $18 billion worth of Luna, right? And so what you have there was something highly risky, but not perceived as risky because there's not really clear disclosures. And if you'd asked 1,000 people, what's the difference between UST and Tether and Circle, they couldn't tell you. But that would be the three examples, right? Sort of Tether's in the middle, Circle's on one extreme, UST's on the other side. So this crash is going to cause a lot of clarity to form there. First, the community is getting educated, right? I bet you everybody in the crypto community today knows the difference between a dollar in the bank and UST. And I bet you they have an intelligent conversation about the difference between Circle and UST and the business model of the two. And we saw last week, Tether had to redeem billions and billions of dollars of Tether, and they could, right? So they could. But if you'd actually tried to redeem $7 billion of UST in a couple of days, well, people tried to do that and they couldn't. So I think the industry got educated, but also I think that there's a lot of people that would like to issue stable coins, like Caitlin Long's bank would like to issue stable coins. And if you look at the banks like Silvergate and Signature, they're FDIC insured banks, but they can't issue stable coins. So, and if you look at JP Morgan and Goldman Sachs and Citigroup, they can't issue stable coin. Now, if you roll the clock back 6 months, the president's working group put out a memo on stable coins. And when they put out the memo, they said, we'd like for FDIC institutions to issue stable coin. Now, putting aside whether you agree with that or not, there's been a regulatory deadlock on Capitol Hill, because in the 6 months after they put out that memo saying they think that banks should issue stable coins, no bank issued a stablecoin. And that's because the president's working group memo said, well, Congress should pass the law making this clear. And until then, we'll think of it this way. So the banks are waiting for Congress to pass the law. Congress didn't pass the law. And all the way up until last month, there's really no clear consensus to move on this. And we didn't expect any clear legislation or regulation before 2023 or 2024. So I think that if we just take the example of stable coins, that crypto crash and the UST crash has simultaneously educated the existing crypto market and all the investors. It's also introduced, the concept of risk. There are different, not everything is equal, right? There are 19,500 things, on CoinMarketCap, but they're not all equal. So to say, well, this is risk-free or that is, like they all have different flavors of risk, but how do you assess the risk? Mm-hmm. So I think that the industry is getting more sophisticated. I think that the regulators now have some pressure. The Secretary of the Treasury was in a congressional hearing with Senator Toomey, and he's been an advocate of some stablecoin legislation. And he asked her, you think we need to get it done this year? And she said, yeah, I think we can and should get it done this year. So the consensus among the regulators and the politicians is, yeah, we probably need to do this. Now, you could say, if you're the crypto anarchist, I hate regulators, I don't want them to do anything. Well, that's one way to view it, but as long as they don't do anything, the industry stays $1 trillion, mm-hmm. $1, 2, $3 trillion. When they do something, then you're going to see people like, let's say David Solomon was on CNBC last week. He's the CEO of Goldman Sachs. Well, whatever Goldman Sachs thinks is probably what JP Morgan thinks and Citigroup thinks and Bank of America thinks and Wells Fargo thinks. So what he says is, yeah, we know the crypto economy's here to stay. We can't custody it yet. We're afraid to custody these assets. Like we're not allowed. His actual words were, "We're not allowed to."
Right.
And if I speak to CEOs of publicly traded companies and banks, like publicly traded banks, they'll say, our regulators won't let us. So you see the conundrum here, which is you could either stay in a regulatory gray zone where there's about 1% of the money. You can be 1 or 2% of what you're going to be, and you can stay in the gray zone. Or you can create a clear public policy framework, and then you move into this compliant zone. And when Goldman Sachs and JP Morgan enter the space, they'll issue $500 billion of stable coin, trillions of dollars. And so you'll go from 150 billion to 1.5 trillion. And when they start issuing in that size, you'll see Amazon and Google and Microsoft using stable coin for international remittance and corporate remittance. And then you'll see it get built into Apple Pay and Google Pay and Amazon as a payment method, right? And then you will actually see billions of people using this stuff instead of hundreds of millions or tens of millions. So I think that the consensus is the regulators need to provide more clarity on this issue of stable coins, and they also need to provide more clarity on the requirements for a crypto security. Right? It's clear that Luna was a crypto security. The reason it's a security is there's an issuer and there's someone that can make decisions. And if I can actually make decisions, if I can take $3 billion and buy Bitcoin, and then I can take the same Bitcoin and sell it on behalf of the people that own the Luna token or on behalf of the people that own the UST token, I'm acting, kind of like a public company officer, and if you're a public company, like think about MicroStrategy. Like if I just sold all of MicroStrategy's Bitcoin and I didn't tell you, right? Or if I bought twice as much and I didn't tell you, I would be changing the nature of the security. I have, kind of an obligation to disclose that, an ethical obligation as well as a legal obligation to disclose what I'm doing when I can actually impact the value of the securities held by the public. So I think that this is going to accelerate that regulation. It'll accelerate the regulation of the crypto securities, and which are many of them are unregistered securities, and there's no disclosure. It'll accelerate the regulation of the exchanges. It'll accelerate the regulation of the stable coin. And in the near term, there'll be a shakeout. So, some things, when you look at them in the light of day, you'll say, for example, what's a shakeout? I decide I like Circle better than I like UST. That's a shakeout, right? Right. And it'll also create an on-ramp for institutional intervention, because you've got $300 trillion worth of money, that's $100 trillion of bonds, $100 trillion of equities, $90 trillion of currency derivatives, all sorts of forms of money. You've got other sorts of derivatives. They're all sitting out in the mainstream economy. And if you might have seen my tweet of Ken Griffin. Ken Griffin gave a speech last week to Bloomberg, and they asked him about crypto, and he said, look, the market deserves clarity from the SEC or the CFTC. What's a security? What's a commodity? And every day, ETFs publish their holdings. If you own it, and there's thousands of ETFs. ETFs are kind of like they're derivative securities of sorts. So, if I can buy an ETF and every day they tell me what their holdings are, then I can get comfortable trading it, shorting it, going long it, holding it, et cetera. So his view was, why can't we see the same disclosure on something like a stable coin, right? We should get some periodic disclosure. And then he ended his discussion with kind of like a degree of frustration, like it's overdue, like it's time to stop screwing around. And if we have regulatory clarity, it's going to open the way for tier one firms like his own, like Citadel. But what he really means is Goldman Sachs, JP Morgan, Citigroup, Bank of America, Wells Fargo, Citadel, all of Wall Street. It'll open the way for them to make markets, do research, right? And to provide liquidity. And provide liquidity eventually means loans, and as well as hold on their balance sheets.
Right.
And they're not going to do it as long as they don't know the difference between a commodity and a security, and they don't actually understand the legal status of these things. So ultimately, what you've got is a $1 trillion industry that'll become a $10 trillion industry if we have regulatory clarity, and then it will become a 20, and then a 30. There's no reason it can't go from $1 trillion to 100 trillion. But you've got to work through these issues.
So you've mentioned that the world needs stable coins and wants stable coins that they can trust. Yeah. So I guess my question now is, which stable coins that are in existence right now do you trust? Would you trust a stable coin issued by a bank like JP Morgan? And would you trust a central bank digital currency?
I don't think there's any consensus or any interest anywhere in the Western world for a central bank digital currency. I don't think the banks want it. It would undermine them. I don't think the population wants it. The banks would look at it as an encroachment on their business. Like Goldman Sachs, JP Morgan don't have a reason to exist, right? So they're not going to want it. And I think that the consumers and the voters don't want it because they think it's an encroachment on their freedom and their sovereignty. So I don't think anybody's going to trust that. With regard to which, if you look at all the existing stable coins, there's not a single one that meets the definition of the president's working group. So there's a debate going on throughout the world. And I think that the answer to what would I trust depends on who I am. If you ask the question, what will a big publicly traded company trust? A publicly traded company would trust a stable coin issued by an FDIC insured bank. So for example, MicroStrategy is not going to hold either Circle or Tether or DAI or a UST type thing on its balance sheet, because none of those meet the standard of an FDIC insured bank. And from our point of view, all we're wanting to do is move money from point A to point B with no risk. And so there can't be more risk than having the money in a Bank of America or Goldman Sachs. Now, if you look at other players, right? If you're a private company offshore, if you're a company in Venezuela or Argentina or Lebanon, then would you take the FDIC stablecoin? Sure, you would. But you might also take a public company like Circle. If there's a company that publicly issues and they disclose it, I mean, do they disclose it every month, every quarter, every week, every day, continuously? Right? There's an interesting question there, but you might take that. That's kind of like, holding a credit instrument from Visa or American Express or something. You might take that if there were additional services, right? Maybe you think that that's a safer thing than putting the money in your own local bank. Now, if you go further and you ask the question, well, how do I feel? What would I trust if I was in Afghanistan or if I was in a war zone? If you're in a war zone and the issue is maybe you can't get an FDIC approved stablecoin, or maybe, I guess if you're in Russia, you're not going to be able to hold an FDIC issued stablecoin if they have some guidelines or rails on it. The real question is, there's going to be a spectrum of decentralization versus centralization of these, right? Right. Like, for example, Tether can actually block an address. But if I was in outside the United States, I might actually think that I'd rather own the Tether than own the regulated entity in the U.S. Right. Right. So the issue is, how sanctionable is it? A fully decentralized stablecoin, right, is most censorship resistant. That will appeal to someone if you can construct it with integrity, right? No one's done it before. It's not clear. So I think that the market will actually go back and forth over that, and the market will determine. And everybody will have different risk tolerance. And so there'll probably be like 3 or 4 flavors, or there'll be a spectrum. But right now, I think you have 2 extremes, right? You're lacking the totally secure regulated stablecoin from Bank of America. That doesn't exist. And then on the other hand, you have the things like UST, which are unstable, maybe not backed by anything. And that's probably a bit too dangerous for any rational person to hold once they understood what it was.